All right, traders, yet another end of the week market analysis. The good thing is the Nifty has managed to post 4 consecutive positive weekly closes. The index is close to its all-time highs. The not so good thing is that the index has also slipped from its highest point last week, and it's looking a little tired. So join me. End of the week, we always take a look at the Nifty, the various sectors. We try to figure out what's happening where and how we should strategize ourselves. So come on, let's take a look. All right, so here we are, 3 time frames. On the left corner, it's the monthly. The center one is the weekly. On the right is the daily time frame. Next pro price indicator, next pro RSI indicator. Now, these two indicators are proprietary, which helps me to analyze the charts better. There's nothing fancy, but it's useful. Also, quick suggestion, request that if you like my work, do comment and share some feedback, suggestions also. One of our followers did suggest me that why don't you take a look at the gold and the silver as well in these end of week analysis. So I think it's useful. So I'm going to take a look at gold and silver as well this week. Right. So if you like this work that I do end of the week for you, do let me know. And yeah, you can always subscribe. Now, the monthly chart is looking much better than how it looked end of September. But we'll talk a lot about the monthly chart next weekend. Today, the focus will be on the weekly. Brilliant Heikin-Ashi behavior, trend indicator, momentum, state of flow, everything seems to be nice and positive. The index is close to its all-time high. So the weekly markers, the weekly readings are all positive. The view, the strategy should be looking out for long trades, and that's it. There are no signs of correction or topping out as of now on the weekly time frame. So positive from the weekly. Daily, the markers are positive, trend-wise, momentum-wise, state of flow is looking good. But yes, we've had a slip from the weekly high, where the weekly high was and where we closed. We've got a slip. Now, in this entire rally, we've had shallow pullbacks, nothing much. And what happened on Friday has led us to another such pullback. These beautiful red HAGBs, as I call them, are signs of consolidations or corrections. They can lead to continuation. They can also lead to short-term correction. I think that one should not be too bothered. There's clarity from the price and the market that it's a bullish market. There's a clear-cut sign that it's tired. And so the view is positive. The strategy should be looking out for long trades, but you should not chase long trades if you have a chart like this. If it's a fresh breakout, which reminds me that there are two sectors wherein one guy is looking like a fresh breakout candidate and the other guy is looking like as if it is shifting its mode. So we'll talk about these two sectors. These probably can play a big role next week. Coming back to the Nifty, so if you have a chart like this, which is fine, everything is positive, does not mean that you will chase and go for a long trade. I would suggest wait out. And as you wait out, charts like this do tend to abide by polarity, which means the previous highs in the future can reverse their roles and become lows or supports. Resistances can become supports. So more or less close to that 25,400, 25,500 stays as your pretty decent support zone for this particular move that is there in front of us. So Nifty view, positive, strategy should be long trade. From the daily chart, do not chase. Wait for a deeper correction, pullback, slow down. But keep an eye for long setups. Before I take a look at the sectoral charts, let's quickly take a look at the broader markets and the CNX 500, mid-cap, small cap. Small cap did not perform that well. As you can see that the charts are taking a little bit of time to open up at my end. There you go. CNX 500, pretty much same like the Nifty 50. So same view. CNX mid-cap. Now mid-cap is on the verge of a breakout from the monthly as well as the weekly. The markers are all positive. The markers from the daily is a sign of little consolidation. So the mid-cap CNX 500 Nifty views are the same. It's the small cap. If you come down to the CNX small cap index, this is where you will find that the move wasn't that great over the last 3 weeks in relation to what we have seen in the Nifty or the mid-cap index. Now, yeah, there's a little bit of a delay in terms of the charts opening up. I'm not too sure. Maybe a little bit of fluctuation at my end. That's the internet outage, or maybe trading view server. But nevertheless, as I was telling you, you can see that the Nifty small cap, the mid cap index is yet to take out this high. So it has moved up all right, but relatively less. Nevertheless, the markers are bullish. So everything from the broader markets to Nifty are positive. Now, before I go to the weekly sectors one by one, I'll quickly take a look at silver and gold. In fact, before that, I'm going to quickly take a look at the dollar index. The dollar index, DXY, you'll find them in trading view, is making a very interesting move on the weekly chart. This interesting move is a fresh trend reversal with momentum. And if this continues, that's not good news. If this move continues and if it gives us a breakout above the 99, 99 and a half, then that's not good for any emerging markets, and that won't be that good for our markets as well. Now, we'll keep an eye on this. We have a positive, quick short-term divergence playing out on the monthly chart. And if the move from the dollar goes above 99 and a half, then we should be a little careful in positioning ourselves. The Nifty view that we just created is bullish. Price-wise, it is. Strategy-wise, look for long trades, but do not chase. To be a little careful and cautious. And that's exactly what the dollar index is also trying to hint. Not any confirmed sign that sell your portfolio, the market will crack and all. Nothing as of now. It's just a hint, so we'll keep it back of our mind. Coming to gold, what can we say? It's one of the finest uptrending chart that you will find at the current juncture across all asset classes. Last week was a week of consolidation according to my Heiken language, and the chart is extremely bullish, extremely stretched. Do not chase, please wait for corrections. Corrections have started on the daily time frame, that's a smaller time frame. The short-term trend has started to drift on the downside. Yes, it is. And I expect this kind of chart to slow down a little bit more. So those who were waiting that when will gold come down, I think looking at the daily time frame, there is a high chance of it to drift a little more on the downside. But very difficult to say that this is the top. On the monthly, on the weekly, there are no such signs. So bullish chart, which is going to go through a short-term correction for sure. Silver, same view. I've experienced that silver, of course, tends to move really, really quick and fast. So I expect that if last week's low is broken, you can expect another move from silver on the downside. I'm not looking at a big-time trend reversal. I'm not looking at any big move on the downside. But yes, a little bit more because it is still quite stretched on the upside. So if you are a long-only trader on the gold and silver, on the commodities end, precious commodities end, I would suggest to wait out a little bit. Now back to equity. Starting off with Bank Nifty, or should I pull out the strike analytics page, quickly come to heat maps and open up our sectoral list, which is the NSE sectors, 15 sectors. Let's take a look at how they have played out last week. IT has been the biggest gainer last week, by the way, close to 3%, 2.34% from PSU Bank. This is fine. Then we have the metals, realty, small cap. It all goes down to Fin Nifty, consumer durables, FMCG, auto, and Bank Nifty being marginally negative. Fin Nifty was down 0.5%. So mostly positive, no problem. We come to RRG graphs. We select our 15 sectors, NSE sectors. We change the benchmark to Nifty 500. We change the daily to a weekly. And number of weeks. Last time, I think it was 10. We can do it around 11 weeks. Let's quickly go and do a cross check, a quick count. Since this particular low, it's been 1, 2, 3, 6, 9, 10, 11. That's correct. Let's do an RRG analysis for the last 11 weeks. So 11 weeks, weekly, Nifty 500, all the NSE sectors, looks good, looks nice. Let's sort in terms of percentage change, and we have these 4 on the leading quadrant. Okay, auto has been exceptional. We have discussed this time and again. It's just slowing down, and my view last week was look for long trades. If you look for long trades, just make it quick, short, hit and run trades, because the momentum is slowing down. With this RRG in mind, if we come to Nifty Auto, what do we get? CNX Auto to be precise. CNX Auto on the trading view charts. Yeah, this is a little bit of a bummer because it's taking a little bit of extra time today to open up. And in the meantime, as it opens, what I can do is I can quickly check the other RRG graphs. Metal, the finest RRG graph that you can expect. Gaining relative strength, gaining momentum, so bullish. PSU Bank, again, a very good looking RRG graph, saying like the metals, look for long trades. And then you continue to have consumer durables on the leading quadrant. If you remember, I'd shared this with you that consumer durables positioning on the RRG graph is nothing great. It does not have a huge amount of relative strength. It does not. It's losing its momentum. See, a chart, an RRG like this, which goes from left to right, is essentially gaining relative strength. This guy is losing the momentum of that strength. It does not have that strength. It's losing the momentum of that strength. So it's not that great. The good thing is if the charts are fine, it can give you a turnaround. So we'll see if we get any breakout signs or signals from consumer durables. But all these 4 sectors are fairly positive. Auto positive, but slowing down, be selective. Metal and PSU Bank looking fantastic. Look for long trades. Consumer durables, tricky. Keep an eye on it. Let's see if any stocks, especially the heavyweights, will allow you a breakout or not. Let's go back to TradingView, and it says no data here. When you get these kind of things, it's always a good thing to hard refresh. That's your Command R if you're using a Mac, or a Control R if you're using a Windows. Save and reload, and if everything is fine, then it should open up. All right, I hope the internet will not bother us now anymore. So taking a look at the CNX Auto, the monthly is fantastic. The weekly's also picked up pretty good move, and this is the short-term bounce back that we've had. Now, if you zoom in close to the daily chart, you will see this range-bound activity, and that is why I'm suggesting stay bullish, but be very selective. So auto green flag stays. The other sector which was looking fantastic on the RRG bullish was CNX Metal. CNX Metal has been in our bullish list for quite some time, not a problem there. This is a little frustrating as the charts are taking a little bit of time. All right, so I have the metals in front of me, and the CNX Metal is looking fine, as this is no guess. Good looking monthly, fantastic weekly charts, and the daily charts have also given you a fresh breakout. RRG is telling us that relative strength wise, momentum wise, it's fine, and we should keep this green flag for the CNX Metal. CNX PSU Bank also picking up and looking very good on the RRG. Chart-wise also, it's looking very, very nice. Yes, it is slowing down. It has been taking stopovers on the way up. And if it takes further stopovers, I think you should maintain a bullish bias. So PSU Bank, Metal, clean. Auto also clean. Range-bound, be selective. It was the consumer durables, which is like kind of hanging around there with a little bit of relative strength. The momentum is going away. So let's quickly take a look and try and figure out if the Nifty consumer durables chart itself per se is offering us anything to work on a breakout side or not. The charts have opened up, not completely, but as I can see that the monthly has been kind of range bound. The weekly has created a bit of a zone for itself on the upside as well as the downside. After a very sharp sell-off, the sector has managed a two-legged bounce back. Marker-wise, I like the Heiken positioning. It is bullish. Markers-wise, from the Heiken reading only, it is consolidating after this short-term rally. Overall, the candles kind of disappeared. I think this is because of some internet fluctuation at my end. I guess so. So overall, I think consumer durables, look out for the top 5 names, right? Let me quickly hard refresh and figure out if I can go back to my usual template and take a look at the other sectors. This is turning out to be quite a frustrating a video making experience for me with the internet thing, but I'll continue step by step and conclude this video.
All right, I think I've managed to sort the issue out.
And this is the consumer durables chart that I was just talking about without the candles there, but it still looks the same. The view is the same. Keep an eye on the top consumer durables thing. Let's go back to RRG graph. RRG. In the RRG quadrant, the next one is weakening. And in weakening, we have the Midcap 100. The Midcap 100 is behaving beautiful like the RRG should, moving from the leading to the weakening. But we also did take a look at the Midcap CNX 500 small cap charts. Also, the Midcap is looking fine and on the verge of a breakout. Now, it does not have a very good relative strength. The momentum of it is picking up a little bit. So it's somewhere there. And let's stick to the price-wise. We can get a good breakout. It's fine. So let's be a little careful with mid-cap names. Positive, but careful. Now let's come to the lagging. Now the lagging list continues to get longer, though the index price-wise is showing very good strength. Over here, we have Nifty Bank, Private Bank. Over here, of course, we have CNX, your financial services also. We'll talk about this because this pocket is the most important one. These 3 sectors, 2 weeks back, we had marked them green, going by their price behavior. And their relative strength behavior in terms of RRG is lagging, but picking up momentum for quite some time. This is the finance, this is the bank Nifty, and of course, private bank will more or less mirror that, almost close to improving, close to the improving quadrant. Price-wise, if you remember, the bank Nifty had picked up momentum and trend was all fine. And we started marking it green, which has played out really good in our favor. So again, an example where price actually dictates the most over here. Because if anyone had gone by RRG or any kind of relative strength, they wouldn't have got that clarity. But price played out well. Monthly charts, Bank Nifty at an all-time high, weekly hits an all-time high. Congratulations, all the markers are positive. Yes, stretched, signs of consolidation. That's the Bank Nifty. Private bank will more or less mirror the same behavior. That's the private bank, same thing. And next one is CNX Finance, an all-time high. It's consolidating. Let's keep price aside. Let's keep RRG aside for a couple of minutes. The financials are the biggest pocket in the Indian equity market. They enjoy the maximum weightage. The financials, the Bank Nifty hitting an all-time high is a sign of strength. I don't know whether the all-time high will sustain and it will keep on going up. That I don't know. I don't know whether this is a fake move and it will turn around for a huge crash. I also don't know that. I know what the price is doing. And what it is doing right now, we can make some sense of what it can play out, how it can play out next. And by the look of it, by the fact that the most important sector of your country, of your index is at an all-time high, gives you that confidence. So the markers are bullish, your view is bullish, your strategy should be going for long trades. But just like the Nifty, this guy also had a good move. This guy is also showing us signs of consolidation. So be carefully bullish. Just don't go left, right, center looking out for long trades. So CNX Finance, we maintain the green flag. We maintain the green flag for Bank Nifty as well as the private bank. Now remember, in the leading quadrant, we had the CNX PSU Bank. And if we take a look at if we relook at the PSU Bank, it's also looking pretty fine. It's a little stretched, but pretty fine. So this is where you would like to look out for long trades more than the private sector ones. Let's go back to RRG. In RRG, we have a realty. A classic behavior, it's gaining the momentum of relative strength. Let's see. As far as I remember, when we did take a look at realty, we had marked it green because of the combination that was improving. And we can see a pretty good move both on the daily, weeklies playing out fine. Stretched? Of course, yes. How can I say that? By the look of the Heikkemachi, I can clearly make out that it is stretched. Do not chase, look for a pullback and then go for a long trade.
The reading from the daily is positive. Look out for long trades and a pullback. The reading from the weekly has just turned positive. It's a fresh upside move. The monthly is still struggling, by the way. So any kind of a pullback will give you good opportunity. Realty stays as a green flag. Next is small cap. We spoke about small cap and the mid cap. So small cap has not performed as good as the mid cap. So let's just be selectively bullish there. Now let's come to public sector enterprise. A public sector enterprise is picking up very good, like a vertical move in terms of momentum. With this in mind, if we take a look at the CNX PSE CNX PSE index, okay, not bad. Very frequent consolidations on the weekly. A little bit of a choppiness and volatility on the daily. You can see that a rising wedge kind of a formation. Does not give you a lot of confidence that yes, it's a table thumping buy trade or bullish, but the markers, the readings are bullish on the weekly. The daily is choppy, volatile bullish. So be very selective within the PSE pack. But bullish, definitely bullish. We maintain the green flag. Now energy and pharma. Energy is behaving very similar to that of the PSE, vertical gain from the momentum of relative strength. With that in mind, if we come to energy, we had marked it green. Good looking Heiken. It has shown strength from the weekly point of view. Good, very good looking daily chart. So definite, this is more conviction. When we just did take a look at energy just after PSE, I get a little bit of, not little bit, much more conviction looking at CNX Energy's bullishness than the PSE. Both are bullish, but energy gives me much more confidence. Anyone else on the lagging quadrant is Pharma. Now, Pharma was doing good, fine. It was gaining left to right, gaining relative strength, gaining momentum. Then it lost all its momentum. It's very close to the axis. It does not have relative strength, but very little of underperformance. What is it going to do? Is it going to turn around? Or is it going to go back to lagging? Now, this is one of the two sectors that I wanted to talk about. And Pharma, if we take a look at, we had marked it green, is on the verge of giving us a breakout, right? This is it. A sharp sell-off, an equally sharp pullback, and now consolidation. You can see the monthly charts back to back, a doji kind of a behavior from the Heiken. So this guy is on the verge of if it gives you a breakout, it can be a big breakout. Because when you recap, when you kind of recoup all the losses, right, you tend to get a little bit tired. So it is showing such signs of tiredness. If you leave room for the index to correct, let's say 50% you correct, retracement, not 50% price-wise, retracement of the move, still you can expect a move on the upside. So I would suggest and request, keep an eye on the top 5 pharma healthcare names and track them and see whether any one of them can give you that anticipated breakout or not. Pharma, we had marked, flagged it green. I maintain that green flag. Now we come to the last quadrant, which is improving. And over here, we have IT and FMCG. So my second sector might be one of these two. Yes, it is one of these two. And that's Nifty IT. Gaining relative strength. Yes, it is underperforming. Of course, it does not have relative strength, but the underperformance is reducing and the momentum is kind of steady. With that in mind, if I come to CNX IT, in fact, both CNX IT and CNX FMCG, last week we had not flagged it. We had kept a neutral view. This week, we have another positive bullish Heiken. Trend indicator is just angling up. Momentum indicator has improved. And this is shifting. This is a shift. I can see a decent kind of a behavior from the monthly chart. Our next RSI indicator is marking, it's flagging off a positive divergence for me. I can expect bullish move from this kind of a chart. Is this a very strong bullish chart? It's not a very strong bullish chart. It's just shifting, as I use the word. It's shifting from a downtrend to an uptrend on the weekly time frame. It's trying to base out on the monthly time frame. It has already moved up on the daily time frame. So strategy view from the daily time frame is positive. We should be looking out for long trades as well as both breakout as well as pullback trades. I'm going to mark IT green after a very long time, and I just hope that it delivers for the next couple of weeks. I use the word hope because if that happens, then even if the financials slow down, the IT will support the Nifty, and the Nifty will find few stocks and couple of sectors with the help of which it can go back to an all-time high. So that's CNX IT. That's our second sector which I had back of my mind. FMCG, on the other hand, does not have a lot of relative strength, and it's losing a bit of momentum there. With that, FMCG, we had kept it neutral. I clearly remember that it's completely range bound, that the range is pretty wide. It's not a shallow range. Now, Pharma also came down and Pharma also went up, but this guy has been range bound for quite some time. Is it not a breakout candidate? Yes, it is. Let's take a look at the weekly. Bullish Heiken, trend momentum, state of flow, just gone positive. Good. Sharp sell-off leads to a sharp rally, then a consolidation. So the Pharma and FMCG behavior are very, very similar. Both of them are breakout candidates. FMCG, I'm going to mark it green, flag it green, which makes all our sectors except tourism, which I'll come in some time, are all positive. Now, please understand, FMCG positive means you need sustained breakout. IT positive means that it is the most underperforming sector which is doing a turnaround game. Metal is already strong and it's showing further signs of strength. Realty has turned around and it's bullish. If it slows down, you can get. So they are bullish, but their bullishness are different in nature. They are positive charts, or they are fresh positive or already extended positive charts. So just because they are green does not necessarily mean that we approach them with the same bullishness, with the same intensity. So let's be a little careful and use our intelligence. Leaving behind the last four sectors, which are not there in the Strike Analytics group watch list, is capital market. Doing fine. We had marked it green. Slowing down a little bit. Very good move. Wait for a pullback. Defense, I've been particularly hopeful that defense will deliver. It is delivering, but it's not making a statement. Still, the weekly charts are positive. The daily is also fine. So we keep the green flag. Digital, IT plays a role here, on the verge of breakout. Very interesting weekly chart. Decently okay daily chart. Fell, went up, little tired up here. Can give you a breakout. Keep an eye on the IT stocks which fall on the digital as well. And then finally, India tourism. This we had stayed away from. We had kept it neutral. Weekly has moved up a little bit, a higher high, higher low on the Heiken. Trend momentum indicator still not that great. Daily chart has improved, so let it stay neutral. It is a classic neutral combination. Daily, fresh improvement. Weekly, still weak, turning around, not too sure. So let it stay neutral. Right? So that was my view for the overall markets. Nifty, positive, stretched, tired, wait, maintain a bullish bias, wait for better entry points. And that's the case with most of the sectors. I did cover gold and silver and the dollar index in this weekly analysis. As I suggested, as I requested, if you have any suggestions or feedback, feel free to share with me. And yeah, I just came to know that 50% of those who watch this video do not subscribe. But if you see value, I know that you will. Till then, take care of yourselves. Trade well next week.